3 is brought to you every business day by us over at Market Rebellion. These are trades that we have found throughout the day that we have decided are interesting because of the size, because they have occurred on the offer, which means they were bought. If that's a call, it means it's bullish. If it's a put, that means it's bearish. And that, my friends, is what we're starting with today on 3 at 3. Our disclaimer is that this service is provided for educational and informational purposes only, full stop. You want to learn more about what we do? Please go over to marketrebellion.com/get started. That is marketrebellion.com/get started. There you will see exactly the sorts of courses we have. If you're a beginning stock trader, options trader, futures trader, crypto trader, we can help you. And we'd love to. We've helped thousands of investors. We've been doing this for now, this is my 38th year at this particular vocation. If you want to learn from people that really know how to do it, go to marketrebellion.com/get started. And with that, let's get started. Starting with Roku. Now, this was from Wednesday last week. As you see, the big red arrow there, Roku was $119 a share. They bought July 10th expiration, which is this Friday, according to my watch, this Friday, July 130 calls, when the stock was approximately $11 under that area. And they paid on average, let's say $2. I'll go to the high end, $2 for those calls. And at the same time, they also were buying the July 140 calls. Now let's see how that's worked out. Not so bad, because there you see the green arrow, July 1st at $119 per share. They were buying Roku and calls, upside calls at the 130 strike. There you see the red arrow to the far right, Roku moving up to 136. Now the right to buy the stock at 130 when the stock is trading 136 is worth at least $6 and probably a little bit more. So in other words, this is a triple, or at least you more than you did 2 times your invested funds, because you put up 200 and you're trading out for 600. So that's a $400 profit. So you didn't just double your money from 200 to 400, you took from 200 to 600, which is, bang, why we trade options. Let's go to our next one. Oh, there we go. My brother Pete and I have been doing this for over 30 years. You want to learn more about it? Go to marketrebellion.com/get started. How about PCG? Because a lot of you were pinging me, because apparently this really frustrated a lot of you. John, what about PCG? You know, that one's not working. It's lost 50%. Yes, it has. There you see, folks, that I am the guilty party that cited this when big volumes of calls traded last week on the 2nd, which was Thursday. Big volumes of calls traded when the stock was $9.15. They bought those July 11s that expire the end of the month. Now, some of you were frustrated by that, I guess, because you kept telling me, well, John, you know, it's not working. Well, it did work, and I did make some profit here, and then I lost money on the rest. But I want to break it down for you. Here's how it worked out. We went from these options as the stock ran up. There you see it on the 2nd. You see it when it was around that $9.15 level. Now it's $9.12. So it's hard to imagine that people get that worked up over this one, but especially since these were options that were 25 cents. Now I paid 40. I traded out of some of them for higher than that. And then I punted or closed the rest of them as it traded back down. Now, so this is not a winner. I'm not out here just, yes, yes, bang, zoom. I'm not doing that. I'm saying this is the other side of it. You got to be disciplined. You got to cut your losses. Now, some of you will hold this one, and you will most probably be right. But because I trade so much, I had to use my discipline and trade out of the balance. So in other words, however many I bought, I traded out a half of them. They didn't double, but I traded out a half of them because as we ran up, as you see, into that $9.60 level, I felt it profitable to take some of that off the table, so I did. And then on the rest, I punted, closed them out at a loss. That's what you do, folks. Not every trade's going to be a winner, but for those that are, I celebrate them. And for those that aren't, cut the loss, move on. Next one, Taiwan Semi. So, for instance, last week, also on Thursday, I talked about TSM, Taiwan Semi. And the July 61 calls were bought for 60 cents. Now, how did that work out? So you've got on the one hand, the option that if you didn't do a darn thing and you were like me and you bought in for 40, you might have sold them out for 20 cents and just gone, dang, I lost 20 cents. How'd you do on this one? The other trade, the other side of it. Well, let's see. Stock was, let's say, 58.5. They bought the July 61 calls. There they are today, those July 61 calls. There you see the big blocks that occurred on PhilX at 10:27 this morning, 2,000, $1.88. At 11:24 this morning, 2,000, $1.86. At 10:03, 2,000 at $1.86. So do you think that there was a little liquidity that was available to you at north of $1.70? In other words, 60 cents to $1.70 means you took a $60 investment and you got out of it, if you got out of it for $1.70, at 170. So 60 to 170 is a $110 profit, compared to that $20 loss that we took on PCG. Now, this is just the yin and the yang of trading, folks. As my buddy Davey Day Trader Global would say, you got to have a little chutzpah, you got to have a little risk in the market or you're not going to make money. And I don't trade like Warren Buffett. I don't hold stuff for years. I buy it and I sell it, and I buy it and I sell it. And if I'm wrong, those sales are losses. And if I'm right, those sales are profits. Now let me show you some fresh meat. First of our 3 at 3. Let's kick it off with Microsoft. As you see, I talked about these July 210 calls being bought in big numbers with the stock at roughly 209 this morning. This followed an earlier buy in the day of the August 14th expiration, not July, the August 14th expiration 222.50 calls. So in other words, they were buying the 210s, the 212.50s, the 215s in July, this week expiration, July 10th. And they're buying the 222.50 calls that expire in August, on the 14th of August. Sounds like we're getting ready to feast, doesn't it? Take a look. There are those 210s. They moved up from that, as you see, 15,000 to 18,000, almost 19,000 just a little bit ago. And those, take a look at those other big ones. The 215 calls today, 13,900. The 2020 calls, also 10,500. The 210 calls with a different expiration, regular July expiration, 10,400 contracts. You get the idea. There's been a lot of buying in Microsoft. Next, second of our 3 at 3, Tilray. Okay, so this one is a pot stock, a cannabis stock that has seen a lot of flows recently, meaning a lot of buys on the offer. Buy, 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 as Jim Cramer would say. Love you, Jimmy. So, Tilray, they bought 8,800 of the July 750 calls. That's the right to buy it at $7.50. Stock's trading $7.13, as you see. They paid $28 up to $45 for each and every one of these calls that they bought. Stock was $7.13. Where is the stock? Well, the stock is moving up, and those calls are no longer 8,800 of those calls. Now they are 34,000 of those calls. That's a lot. I like to follow a lot. When I see a lot trading, I want to be on the same side of the market as those guys. When they're buying on the offer, I want to be in there buying along with them. So that's what I did here. As you see, these are regular July expiration, the 750 calls, and big numbers of those of the 750 calls in other expirations as well for Tilray. So I'm in these, and we'll probably be in them for about a week. Let's get to our third of our 3 at 3. Kick that one off with First Solar. Why? Because I bought it and it was my final trade on the halftime report today. Why did I buy it? Well, because somebody was buying 13,000 of the this week expiration 53 calls. That's 53 calls that they were buying at with the stock at 51.70. So the stock is 30 cents below 52, and they're buying the 53 calls. And they paid $35 to $68 because every option is for 100 shares of stock. So they paid $35 to $68 for every one of these 13,000 options. So that means that they have traded about $1 million worth of premium like that in First Solar. Again, I want to follow. I want to be on the same side of the trade as these men and women. And guess what? There it is, moving up $3.30 or over 6% to 53.18. In other words, these calls are now in the money. They were in the money by 18 cents a little bit ago when I did this slide. So if you are somebody like me, you might already even be looking at taking some profits as this stock runs and as it is the 10th of July expiration calls that we're talking about. So that's what I'll be talking about later today on our interview with Kenny Polcari, our roundtable. If you'd like to join us, even if you're not a subscriber, you can join for free. Just go to marketrebellion.com and you can sign up and join us. I'll be talking about the S&P run. I'll be talking about the VIX. And I've got more slides that we want to show you, but I can't right now because I've run out of time. Thank you for joining me today, folks. I hope you have a great day wherever you are. And I hope you join us every day. I'll be back on the halftime report tomorrow. And until then, unless you join us for the roundtable tonight, I say adios, have a good night, bang, let's flatten the fear and feast.